None other than Fari Hamzei. How you doing, Fari?
I'm pretty good. How are you, sir?
We're good. We're good. Let's just start with a little general market talk here. Spent quite a few
Okay.
days over 2,100 in the S&P futures. Gave it back
Correct.
a little bit yesterday. Closed above it, now back below it. What are the Sigma channels telling you?
Well, the Sigma channels, we're sitting at just a tad below plus one, having made a new high 2, 4, 5, 6 sessions ago, and we touched it day before yesterday on Monday. More important than that, the CIs are beginning to rotate toward downside from a red area, but it's early. Here's the issue. Charlie Evans speaks shortly, in about top of the hour. In about 24 minutes, he's the king of the doves over at the Fed. And as you know, these guys all have panic buttons now. Used to be in the old days, only chairman had a panic button, and every once in a while, maybe the White House would call him and say, hey, help. These days, it's like a chorus, and they all have panic buttons. So we have to see how, given that we're down 5 handles right now overnight, or about 6 right now, what he might say. And he's our buddy over here. He sits on Jackson and LaSalle in Chicago. So I'm not too hopeful. We're long and short. We got a little bit of a put activity on, just in case this actually does rotate down. But as you know well from the charts, we've had very shallow drops, and all the dip buyers rush in like it's a gold rush or something. But
that's what's happened the last 5 years.
This market is tough.
Yeah, it's tough to short. It's a tough market to short. That's been the trend the last 5 years. Every time we pull back 20, 30 S&P points, the dippers come right back in. They think a pullback is 1% or 1.5%. A correction used to be 10%. Now a correction is 1 or 2%. It's just everybody's so hungry to own stocks.
Last time we had those conditions, Dennis, it was 2011. The credit rating issue.
Yeah.
But since then, that was only an instance. That was just like one event.
Yeah.
Throughout the year, and then now we don't even get that. So so trading options is not easy because you got a delta of 50, and you got bid and ask spread to pay for. You got slippage and commission. How do I make some shekels at the end of the day? I mean, just difficult. So we've been trading a little bit more futures, and very cautiously. Yesterday, I had to use NQ as a hedge a few times when you were not sure. And as much as I disagree with Netanyahu almost on everything, yesterday I ended up thanking him because he gave us some volatility. He took us down and brought us back up. So when he spoke, the market sold, and when he stopped, market rallied. So we made some shekels yesterday, but we'll see. Maybe we need another Netanyahu speech today. We'll see.
Yeah, pumping a little volatility. So as we transition out of earnings season, what do you tend to focus on? I mean, I know you could care less what the Wall Street analysts have to say. How do you focus on what you're going to trade for the day? Do you just kind of
we look for events. Okay. One of the items we're in is Apple. We look for event-driven issues, and then just market timing. That's the only two you can really do because you're out of earning news. So we got less on, but we are again event driven. We have Apple, we have Microsoft on. Let's see, we have we have SPY, IMW. Let's see, Ethan's got a couple of stuff further out. We look for a reason to trade, not to trade because we have to trade. And right now, of course, if this thing rotates, then we'll dump the calls and start adding to the puts. If it doesn't rotate, then we have to dump the puts and let the calls run.
All right, help me out on Apple here. Help me out. I'm dying to pull the trigger here. I see you made the all-time high at 133.60 on the 24th. You've put in 4 lower highs since. You have 3 lows right around the 128 area, 128.09 to 128.30. Wicked consolidation in here. Should I just try and go with a 129 straddle here and ride it out, or get a strangle on? Maybe
this is. I'm sorry, I forgot. I missed the asset. You saying IMW?
Apple. 3 lows in
Apple. Oh, Apple. I'm sorry. I didn't hear that. Hold on 1 second.
Okay.
Let me bring your chart up. Yeah. I wouldn't do it. I'm not a Stroud guy. I do either outrights, which is rare these days, or I do call spreads versus put spreads. If you look at where we are now, I'll tell you what position we have. We have a 130, 135 call spread for April.
Okay, so you're still in the bullish camp there. Okay, I'm just looking at that.
Yeah, for now, yeah.
For now, okay, I know that can change. Question in the chat here. Is Fari concerned that there are less names making new highs while the market is at all-time highs?
Well, that's typical of potential topic format where people start hiding the bigger names. So if, yes, we do plot 52 weeks highs for S&P versus 52 weeks lows. And the lows are not jumping up, it's way too early. But we're getting less and less, and the gentleman has a correct observation, less and less of new highs, even though the market is at the all-time high. So that's typically precedes a top. And what is happening is that the money managers are parking their money, if they're making any long bet, okay, they're putting it with the better management and better balance sheet. Therefore, what's that choice? Is the big caps. So you'd see a lot of bigger names play and less in the smaller ones. Now, to verify that, we go and take a look at Russell. And Russell has been fairly flat last few days. We did have a breakout yesterday as a new high plus outside bar. And then we had inside bar yesterday, but it's been a fairly steady range at about 1230. It hasn't dropped yet. And its CI is still rising. So, again, that adds to the confusion. Because normally Russell would be leading that. It's not. So, peculiar. Again, given the artificial interest rate environment you're in, or Fed policy we're in, you're going to see a lot of correlations thrown out of the window. What necessarily worked 2 years ago, 5 years ago, may not apply, and it only cause you some headaches and heartburn.
I just looked here. 179 out of the 500 S&P 500 companies are within 3% of their 52-week highs. So there's still quite a few. Not a lot making new highs yesterday because we had a down day. There was only, I think, 10. But there's still 179 companies within 3%. So Brett's still pretty good there.
Yeah, we've been doing on the average, Dennis, about, I'd say something around 60 new highs a day in the last 2 weeks. Okay. Yesterday we did 11.
Yeah.
The day before that we did, looks like we did 45.
Yeah.
So it's, no, I'm sorry, 56. We did 56. Yesterday was 11. Of course, being a down day. It is ticking down slowly. The peaks were actually in December, okay, and early mid-January, which was around 140. So this is more of a cluster analysis. It's the shape. It is, you see, especially on the weekly. If you step back and graph that on weekly, you see the arc forming. Typically, this precedes a top. That means that we still got to get newer highs, but this would not move, create another divergence. But as I said on our market timing feed, Hunter Killer Summer over the weekend, divergences are abound. I mean, you see divergence almost everywhere, and still the market is rallying a wall of worry. The other thing is oil. Oil moved up a little bit yesterday. Again, thank you to Bibi. And I was looking for a possible retest. If you go back on a 3 month chart of oil, crude oil, the spot futures is 44. I mean, the front month futures, the low was 44.37. We're traded at 50.81 right now. It's not a pure clean retest yet. I'm not sure we'll get it or not. It's a higher low, but you're beginning to see documentation of the softness in the oil patch. For example, there was an article yesterday in North Dakota. The rent has dropped quite a bit by about 20%. Where this was a major area for people who needed a place. Some people were sleeping in their cars. New properties have come online, and now you're hitting soft patching labor, and it's going to get worse because of what we've talked about, the storage of all the drilling that's coming out. We have an oversupply. I would be watching the EIA data both on Wednesdays and Thursdays very carefully, both on oil and nat gas.
Hey, Fari, let's go to some of the momos here, and I know you've been kind of hands-off on Alibaba. I know you like to, accumulate some data here. This thing, it just seems to just get hit with bad news after bad news here. Touched the $80 level, got a nice pop yesterday. Is there any reason to try and pick a bottom in Alibaba?
Well, did you see there was a comment about the fake customers they may have? Oh yeah, that again. When you say Chinese company, I'm saying who's the CPA over there? Hello, and if you can you say all the bad news? What would the system come after you? The authoritarian system that runs it, with the vested interest and so forth. We're in a channel, okay, -1, -2. We've been there 5 weeks now, so we're beginning to get some graph on the weekly. On a daily, we're on a sell. We'll continue to go lower. We hit 3 sigma yesterday and pulled back up. We may be close to a buy point. I would like to see at least the CI to flatten. Right now, CI is still pointing down, but we hit a -3 sigma yesterday, so that's day 1. Okay, I would see where we are on Friday. In case this continues, if it continues day 2, day 3. If the market is lower, maybe that would be day 2, along with the market. But I would want to see 3 days at 3 sigma. That's when you flush out the sellers. Yesterday we had a good volume. We had a spike in the volume, about 39 million. We just need to. We're getting close. If you like, more than happy to post it for you, and then you can take action.
You know what? We got a question from the chat here. Rob Hood's just asking, where do you get your Sigma information from? Is that something you've created on your own there, Fari?
We've discussed that before. Sigma channels are... Okay, no worries. Yeah, I'm a good friend of John Bollinger. I ran the user group that he started. I often use that, which is the two standard deviation, 0 and -2 standard deviation. While I was in California, one night I was very tired and I missed the inputs. And I usually shut down my machines at night. That night I didn't. Thank God or thank universe, whatever you believe in. And I said, okay, enough is enough. Tomorrow's another day, another shekel. Went to bed, came in the morning, and alert and look at the charts. I said, this doesn't look right. I started interrogating the inputs. I looked like I'd put in -3 and and +3, rather than 2 and -2. Then I said, oh, wait a second. How about +1, -1? So as I changed that, I put extra lines in, a pattern emerged. Kept that for a couple of weeks, and then boom, light bulbs. You see the pattern of what you look for. I went to see John. I said, John, let's do a lunch and let's talk about it. And he goes, yeah, I haven't looked at it. I have, but, it's 2 and -2. That's where we get really extreme. I said, I'm not worried about the extreme. I want to see continuation before we get to extreme. I want an advanced look. He goes, no, I haven't looked at that, but yes, it is. So just to keep things clear, I went back to the source, which is the standard deviation is statistics. That was made by Ottoman Empire. The standard deviation is sigma, so I call it sigma channels, rather than bands. And then I came up with the rules for it, of how you trade it. How you do it on your platform, just take Bollinger Bands. If you don't have the code, take Bollinger Bands and do multiples, okay? And then change inputs on the next 2. So instead of having 1 Bollinger Band, you need 3 of them, and then you change the inputs from +2 and -2 to -1, +1, and then -3, +3. So in a way, you need to have 7 lines, okay? Now, that only gives you the volatility. That gives you the vibration. Does not give you, say, the direction, Okay, why? Because it's based on moving averages. Remember, the center line is still 20 bar, so your half cycle out of phase. Okay, that's just digital signal processing. So that means you're 10 days out of phase, or 10 bars, whether you're looking at hourly or looking at weekly, what have you. If it's weekly, you're out 10 weeks out of phase. To go around that problem, you need CI. CI is something I created. CI turns on a dime, and that tells you where the excess is coming in. So in line with vibration and CI, you get the clue what to do. Right now, BABA is at -3 sigma day one. You need a 3-day count if it gets flushed. Sometimes it doesn't. It comes back up, and you have a further cascading downward on the price. But the CI is still pointing south. CI still says, oh, hold on. And it's green and pointing south. That means that shorts hold on. Not ready to go long yet. And before you go long, you need to cover the short. If you were surfing it, if you were surfing the price. It just, it's something that hit me, worked for me, and then I started developing trading rules for it. When you're first to this space, nobody's going to help you. You have to come up with a procedure for it too, and this was back in 05, 06. And then I did a table based on volume, expansion, sigma channel, and put call. That was a big hit. And by names, each name, and there are color codes, and each night they would publish that data that says what to do. The problem was that it was prohibitive. After 2008, the cost of producing that was really prohibitive, and nobody was trading. All the mom and pops left the market, and so we stopped publishing it.
We've been on the line with Fari Hamzei. He's founder of Hamzei Analytics. He joins us every Wednesday with his colorful approach to the market and very technical. Thanks a lot, Fari. We appreciate your input. We'll look for some of these scenarios to play out. We'll talk to you again next week.
My pleasure. Thank you, guys, and good luck.
Thanks, Fari. Great explanation on the Sigma channels there, too. Thank you.